Okay, and welcome to Inside the War Room. Ryan right here with Marty Bent. Marty is got a couple things going on, Marty. So let's kind of go through them. You're with the Great American Mining Company. You have a podcast, Tales from the Crypt, right? And a newsletter.
Yes. Have my hand in a bunch of buckets right now, all related to Bitcoin. Great American Mining, uh, probably most pertinent to your audience. We are using waste gas in the Bakken to mine Bitcoin. And then yes, I host a podcast, Tales from the Crypt. I posted that for almost 3 years now, just talking about Bitcoin, trying to educate people about Bitcoin. And the newsletter Marty's Bent has the same sort of ethos, just trying to educate people about Bitcoin who are curious to learn.
Okay, and we'll link to all those things right below in the video so you can check that out as well. Full disclosure here, just for the listeners, I am a stakeholder in Bitcoin. I have a whopping, I'm looking up right now, I bought $113.68 worth. My equity is 161.82. So I might retire after this podcast is over because I'm up 42% on my Bitcoin investment right now. So
Hey,
there we go. So some of our folks might be, I think everyone's familiar with the term Bitcoin, but for those who go, I'm familiar with the term, but what the heck is a Bitcoin actually? Kind of maybe walk us through at the high level for now. What is a Bitcoin, and obviously, and what does it do? What's the functionality of it?
yeah, it's funny. What the heck is a Bitcoin? I'm actually making a video right now titled "What the hell is Bitcoin?" What is a Bitcoin? So Bitcoin, in its purest sense, is a digital bearer asset. So the way gold and cash are bearer assets in the physical world, Bitcoin is a bearer asset in the digital world, and it is the first truly scarce digital bearer asset that's ever existed. So in the way that when you hold gold in a vault that you possess and you own that gold, you truly own that. Bitcoin is the same way. So it's set up using private public key cryptography. And when you hold Bitcoin, when you produce a private and a public key pair and you send some Bitcoin to your public key, you hold that. So it's a bearer asset in that sense. It is a sound money for the digital age. And it's an attempt to sort of distribute and decentralize the way money's created in the modern age.
Okay, so I'm holding right here, not a Bitcoin. This is a U.S. Embassy coin from my visit to the U.S. Embassy in Beijing. Where can I get a Bitcoin that looks like this?
There's some Cassius coins that look like that, but they're not really. So they have a private key on them that gives you access to Bitcoin on the ledger, and it really is just they exist, but the Bitcoin's not really on the coin. The private key.
So the coin is just more of a vernacular for folks to understand money, right? You don't need to carry around a wallet full of Bitcoin dollars or Bitcoin pennies or whatever. It's just a coin to let people know this is a term of currency, and then the bit is obviously for understand there's some kind of technological bent around it, right?
Yeah. So basically, Bitcoin when you own Bitcoin, you basically own a spot on the ledger, and you can use cryptography to prove that you own a certain part of the ledger. There will only ever be 21 million Bitcoin. So depending on how much you own, that's sort of your slice of the pie at any given point in time.
And at $161, I don't own a very large slice of the pie, right?
No, so you probably own, that's probably, so Bitcoin's broken down to 100 million Satoshis.
I actually have it right here. It's 0.01712889 is the quantity of actual Bitcoin, of a Bitcoin, I guess I actually have. So
you have more than 1 million Satoshis.
Yeah.
So this will be pretty valuable in the future.
I'm rich then. There we go. Okay. So you mentioned gold. Let's kind of start with gold. People are familiar with gold. Obviously the U.S. and went off the gold standard many moons ago before I was even alive. One of the concerns that I've had, and just for the folks who are tuning in here, this is kind of not a defense of Bitcoin, but the questions that folks that like myself who aren't Bitcoin experts that might have. We brought on a guy that is kind of an expert to kind of help us understand and walk through, and some of the objections that you might have as well. Hopefully will be answered. But let's talk about gold. So one of the things with gold is does it have intrinsic value? And so you could say, well, you can melt a gold bar down and make it a ring or a necklace or a watch or whatever. I guess if it's heavy enough, you could hit them over the head with it. It could be a weapon, but it does have some sort of value outside of the currency aspect. Does Bitcoin have anything? And I'm not a huge believer in the intrinsic value of gold, just to be clear, but it does have some. Does Bitcoin have any kind of intrinsic value that would kind of say, that kind of gives it something other than just being able to be traded back and forth as currency?
I would argue no, and I think that's actually a good argument, right?
Okay.
Because the intrinsic value argument of what gives gold its value, I think, is a bad one. I think gold was used obviously as jewelry, and but I think it predominantly has been used as money throughout history. And the fact that Bitcoin really doesn't have any intrinsic value just defeats the opportunity cost of using a Bitcoin for anything else other than a store of value, medium of exchange, unit of account.
Okay.
There can be arguments made that maybe some more technical people would argue that Bitcoins can be used. You can write code into Bitcoin transactions that make it do something. You can get pretty complex with if-and functions that sort of enable smart contract capabilities that enable automatic sort of dispersion of Bitcoin to happen. And maybe that's some intrinsic value, but I would argue that no.
Okay.
There is no intrinsic value, and I don't think that's a bad thing either for Bitcoin.
Okay. So we brought up the jewelry. So part of the reason that there is a cost for gold, there's a lot of reasons, but you had to actually go and get it at the ground. It's not raining gold, or it wouldn't have hardly any value at all. So Bitcoin, I know you mentioned the mining aspect. Folks here, okay, well, it's not a tangible thing that you can hold, as we pointed out a second ago. It doesn't have intrinsic value, like you can't turn it into anything else. How are you mining this coin that's not a coin then? And what's the purpose of that?
Yeah, so the way Bitcoins are brought to the market is via a process called proof of work. And this is a highly energy intensive, basically computer puzzle that miners need to solve so that they can add blocks of transactions to the blockchain. And when a miner does add a block of transactions to the Bitcoin blockchain, they're rewarded with Bitcoin. Right now, I believe there's like 18.6, around 6 million, maybe 7 million Bitcoins that have been distributed to the market to date. Again, there will only ever be 21 million, and around 2140 is when people believe that 21 millionth Bitcoin will be mined. But the way they are mined, and like just as you have to spend a lot of energy to drill holes in the ground and sift through the soil to get gold, with Bitcoin, you have to buy mining hardware, find energy sources, and solve these energy intensive computer problems, basically these hashing functions. And so the specific hash function that makes Bitcoin go around is called hash cash SHA 256. And basically what miners are doing, they're engaged in a race to find a specific hash using that function that is below what's called the difficulty target at any given point in time. It's really hard to find a hash below this difficulty target. And so the purpose for mining is to create a process where it's very costly. So you can prove that you expended a lot of energy and money at the end of the day to add this transaction, this block of transactions to the ledger. So there's skin in the game in that aspect from the mining perspective, where it's costly to add transactions to the ledger, and also it's costly to overwrite transactions on the ledger, which really gives its value. The amount of computing power and energy needed to overwrite the ledger and sort of reverse transactions and add fake Bitcoins is very expensive. And if you fail to do that successfully, you've wasted a lot of money.
Okay, so let me ask this question. It sounds like you've already answered it, but just to be clear, I have a computer desktop right here. It is not a $500 computer, but it's also not a $15,000 computer. It's a above average desktop computer, we'll say. Because I do podcasts, got stuff like that. If I said, hey, I'm gonna download the data on how to do Bitcoin mining, it sounds like you're saying that this little setup I got here is not really even remotely possible to do this in an effective manner, correct?
No, not anymore. In 2009
Okay.
to 2012, that would have been possible, but as more computing power has joined the network, the specialization of chips has gotten really,
Mm.
really intense. So
Mhm.
right now, the chips that are used to mine Bitcoin are ASIC chips. So they're very specific. They're solving very specific problems. They're not a CPU where you can run many operating
Mm.
softwares and different apps. They're not GPUs, which are gaming computers, which allow you to
Mm.
process things much quicker. It's even more intense than that. ASICs are solving one specific problem that the chip is directed to solve. And for Bitcoin miners, they use ASIC chips that specifically solve the Hashcash SHA-256 um, computational problem.
Okay. So I can't hold it, I can't mine it, but I can buy it and sell it. I can trade it. And as an aside, it to my knowledge, if you follow day trading at all, it is not in the pattern day trading class, which means you can actually day trade it without having an account of $25,000 or whatever it is. So you can actually kind of day trade the coin as well. So for most everyone here listening, unless you have some kind of excess natural gas, which we'll talk about in a minute, that you might would be involved with, buying or selling the coin, or buying and holding the coin, are kind of the main reasons we would be interested in Bitcoin, unless I've missed anything, right?
Uh, you could also work for it, so you could just receive it. You could set up a wallet, and if you want to work for Bitcoin, you could work for it as well. Then you're
Yeah,
selling
yeah.
your
So
labor.
currency
You're
purposes,
buying.
yeah, currency purposes. I guess you're not gonna be a collector of rare Bitcoin coins, or it's just it's okay. Okay. So the thing with the folks that are looking to receive it, or they looking to buy it or sell it, I got my Bitcoin chart up right here, and it looks like on the from let's see here, 2017, on the west side of the mountains there, it looks like it's going into a nice desert. On the east side of the mountains there, it's got a nice little slow Rocky Mountain slope going down to the right. When you look at this chart, it hit 19,000. Most people had heard about that. God, Bitcoin's 19,000, or they maybe thought 20,000, and then it went down to I think 3 or 4. Now we're at, right now this recording it's at 94. It looks like there's a lot of volatility that's baked in, and there's no dividend being paid. So for someone saying, okay, well, I might want to buy it, or I might want to hold it, or I might want to not day trade it because that'd be a little bit different, or receive payment by it. God, it sounds kind of scary to be caught up in this, because you could have wild fluctuations. Just a few months ago, it was I think what we're talking about offline was 4,800 back on March 12th, and on May 28th it's 9,400. That's a pretty drastic swing. Now, obviously, if you bought at the 4,800, you're really happy today. If you're buying at the 9,400, you might not be happy in 3 months. So how much diversity should they have in Bitcoin? Kind of walk me through how you think about that.
Yeah, Bitcoin's volatility obviously is something that drives a lot of attention to the protocol.
Mm-hmm.
And if you actually take a step back and think about it, the world is discovering a new monetary good for the first time in quite some time. A truly competitive monetary good that's not controlled by a central bank or a government. It is a free market monetary good that the world is currently trying to price. And we're only 11 years into the Bitcoin protocol being live. And I think just naturally this volatility it should be expected, right?
Mm-hmm.
Not everybody's going to coalesce and agree that Bitcoin is the global currency at once. If that were to happen, all the value would flow into it and there would be no volatility. So
Okay.
what we've seen throughout time is these sort of fractals up and to the right, typically for the last 11 years. Right now, we're still in a bit of a bear market, but I think all things considered, prices held up pretty well. And one thing I would do if you're looking at a Bitcoin chart was put it on log scale, and it's sort of less daunting if you do
Mm-hmm.
that. Another thing I would look at is the price lows of every year. That's an interesting chart to look at. Like the lows of every year have consistently gone up, give or take 1 or 2 years, I believe. And so yes, the volatility is it's daunting. It's exhilarating too. It's sometimes if you have skin in the game. And so one thing we recommend on Tales from the Crypt, the podcast that I host, is the concept of stacking sats, which is another way for saying dollar cost averaging, because due to the nature again of the world discovering a new monetary good, it's extremely hard to time these price movements, and
Right.
Bitcoin moves very quickly, like in 1 to 5 days a year. It moves pretty significantly. Like March 12th, it moved significantly down.
Yeah.
So the best strategy for me personally, again, I'm not a financial advisor,
Yeah. This is
but
entertainment purposes only.
yes, it's just I believe in Bitcoin in the long term. I think the world needs a currency that is bereft of centralized control via governments and central banks. I think Bitcoin is the best shot at bringing that to the market. And so I just buy a set amount every week, and that's worked out pretty well for me personally. Again, not financial advice, but yeah, if you trying to time this market is a fool's errand. And so just if you believe in the thesis that Bitcoin could fulfill a reserve status for a digital currency in the future, it's binary, right? Bitcoin either fails or it succeeds. And if it fails, it's worth zero. If it succeeds, the total addressable market is such that it will be far higher in price than it is now.
Yeah. So let's talk about that. One of the best cases, I think, for Bitcoin, and the worst cases, it's kind of the two sides of the same coin almost deal, is if you look back at, and we'll kind of do a little geopolitics here, the U.S., Iran, Trump came in, we had the nuclear deal, Trump got out of it, and he put sanctions on Iran, which made them, when the U.S. put sanctions, because we have such influence and control over the international banks, we kind of prohibited them from making deals. There's actually a story in Bloomberg just a few weeks ago about they're sending planes back and forth for Venezuela with gold on them to get payment. That's because they can't actually get their currency cleaned, if to use that term, to the banking system. So if you look at that, you go, okay, well, that's a one of the questions I've asked historically is, why don't these governments go to Bitcoin? Because then they could circumvent these sanctions. And people, there's a lot of reasons given, and I mean, I'm not going to spend a lot of time on why I think some of those are valid or not, but the core thing that's always bothered me about the potential for Bitcoin is that if you wanted to, as a nation right now, to really buck the U.S., you could switch to something like Bitcoin, and then make your currency dependent on that on some level. Obviously, you got some volatility, all those issues, but that would actually be a major step in the right direction for what you're proposing. The problem is, it seems that the governments understand that if they go to Bitcoin, maybe taxing or controlling people via the currency is a lot harder. So I think if the U.S. has a president like Trump who likes the tariffs and sanction, whether you agree with that or not, kind of irrelevant, they continue that kind of monetary policy moving, beyond 2020 and into 2024. It could put pressure on these governments to go to some kind of crypto coin, Bitcoin or not. But their reluctancy makes me wonder if they're kind of afraid of losing control of their population if they go to Bitcoin. Because as you know now, if me and you want to get up and leave America, we got to go to the bank, we got to go close out our account, we got to go do all this stuff. We got to get cashier's checks or whatever. If you have Bitcoin, it's you get on your little phone and you just hop on a plane and you're gone. And so you kind of remove the restraints of the population, and governments, as we know, like them or love them, they like to have a population that they can control on some level. So what are your thoughts on that?
Yeah, I think you'd actually be surprised that this is already happening. Venezuela specifically is known to have confiscated mining equipment of their citizens and used it themselves. They've got very cheap oil, and obviously Venezuela is high on the list of countries that are brought up when talking about Bitcoin due to the sanctions against the hyperinflation that has happened within the country. And yeah, so Venezuela's confiscated mining equipment, used it, and there's actually rumors that they have used Bitcoin to trade between Russia for like medical goods. Rumors. I've interviewed a couple of Venezuelans on my podcast who think that the Venezuelan government specifically is definitely using Bitcoin
Now you're saying Bitcoin
to skirt
disappeared.
sanctions.
Yeah, Venezuela did have their own petro coin or something they're talking about doing. You're talking not that. They're talking about the actual Bitcoin itself, right?
Yeah, that petro coin's bullshit.
Okay, yeah, that's what I thought too. But when you said that, I was like, okay, I just remember that in the back of my mind. Okay, so it is possible that you are seeing that, and to be clear, I don't. So let's just parse out the arguments here. Government to government transactions with the Bitcoin. Okay, that would not surprise me. Allowing the population at large to use Bitcoin. And I believe it was South Korea. Was it like a year or two? Came out and said that, hey, we're not going to let you do it. And they may change their stance. Obviously, this is your domain better than mine. But it seems like the governments are afraid to push their people towards this currency.
Yeah, some are definitely more scared than others. Japan came out years ago and labeled Bitcoin as legal tender, and that's sort of the beauty of the distributed nature of Bitcoin, is it forces these governments and individuals within countries, within borders, they're engaged in a jurisdictional arbitrage. So if you have one government try to stop their citizens from using Bitcoin in one part of the world and another allowing their citizens to use it in another part of the world, people may flock to that part of the world where people are allowed to use Bitcoin. And even if the US were to attempt to shut down Bitcoin or not allow our citizens to use the network or make it illegal, it would be hard to really make sure that no individuals within the US aren't using Bitcoin, because it's just computer software at the end of the day. You can download it pretty easily on your computer and interact with the protocol, and that would be hard to track, especially with technologies like VPN and Tor. But yeah, if one country were to attempt to shut Bitcoin down, it wouldn't kill Bitcoin, because you have nodes that are geographically dispersed all throughout the world. And if one country were to shut it down, that's an opportunity for another country to welcome Bitcoin. People want to use Bitcoin with open arms and say, hey, you can build your products here, you can use Bitcoin. And that's sort of the beauty of the incentives of the protocols, is once you have one domino fall on the international level, one country, that's sort of, I mean, Japan is labeled a legal tender, but the government hasn't really been using Bitcoin. They're just allowing their citizens to. But once you have maybe central banks or governments get into mining, using excess energy to mine, I think there's sort of a domino effect where, hey, if we don't allow our citizens to do this, they're going to miss out, and then we're going to miss out on a lot of economic opportunity in the future.
Okay, so you mentioned it's hard to restrict it because of you can download it on a computer. They could make it cumbersome, obviously, but what about the mining aspect? That would seem to be maybe where the pinch point could be, is that you can't legally mine for Bitcoins in a country. We'll follow this up with some of the things you're doing in the Balkan to mine it. But if they put a pressure on to mining it, just to use that term, is there, if you're, maybe rephrase like this, you guys are using excess gas to power the mining operations in the Balkan. Okay, well, there's not shale gas everywhere to power these data centers, these mining centers. Is it possible that they could, in a few geographic spots, ban the mining, and that would really slow down the production of Bitcoin? Or is it no, you get the power from some other kind of wind energy or something like that, or kind of help me understand if what threat banning mining might be to Bitcoin, if any at all?
Yeah, it could be a temporary threat, and so that's the beauty of mining too. Is so Bitcoin mining sends miners down a road to find the cheapest, most abundant energy sources in the world. I think a lot of people would actually be surprised to find out one of the latest studies. It's actually probably like a year old at this point, so I'd be interested to see what the updated numbers are. But when that study came out from CoinShares last year, they found that around 73% of energy used to mine Bitcoin is actually renewable. So hydroelectric,
Really?
geothermal, solar, wind. And that's because mainly hydroelectric in China, because there's a bunch of ghost cities with huge dams that aren't serving, that aren't delivering energy to cities where people are using it. There's a lot of ghost towns and a lot of dams on those ghost towns. So it's very cheap energy. And that's the beauty. Another beauty of Bitcoin is it allows individuals who are willing to go to that cheap energy source to plug in and use that cheap energy to mine Bitcoin and have a higher profit margin. So if a government like the US or China were to shut down mining, I mean, there are abundant cheap energy sources around the world. Somebody like Kazakhstan or Belarus would welcome Bitcoin
Yeah.
miners. Kazakhstan's got a big operation coming online. And so another thing, like if a big country like China or the United States were to ban mining in a scenario where all the miners within their borders had to shut down their equipment, it would certainly slow down the production of blocks, but only temporarily. So going back to how mining works, every 2016 blocks, there's something called a difficulty adjustment. So depending on how much computing power is entered or left the network, the protocol will sort of gauge how fast or slow blocks are coming in. And every 2016 blocks, it adjusts the difficulty target. So if a lot of computing power comes on the network over the course of 2016 blocks, it'll make it harder to mine Bitcoin. So it sort of paces out the block production at around 10 minutes, which is the target. If a lot of hash rate leaves the network over the course of 2016 blocks, it'll make it easier to mine Bitcoin. So blocks can be produced at that 10-minute rate as well.
Interesting. So just to kind of recap, in a perfect open society, what you would see is these mining centers would set up in Kazakhstan, and they might be there for a year or two, but then in Nigeria, they would find, oh my gosh, there's actually fundamentally cheaper energy because of whatever, some oil deal or wind deal or whatever. So they go there or someone else would open one. And then in, Chile, they would open up one there because of something. So it would almost kind of tip off what's going on a lot of different levels on a geopolitical spectrum, because you would see the mining move around or ramp up production, or whatever the proper terms are here. That's an interesting insight on what's going on around the world, is to look at these mining centers, because as you mentioned, thinking about the China ghost towns, that's like, okay, that's quite fascinating to think about. That's what's going on there, especially China's stance on Bitcoin, which is not very favorable.
Yeah, it's really ironic in my mind that China has produced some of the frankly best Bitcoin entrepreneurs to date, specifically around mining.
Mm-hmm.
All things considered, considering that these entrepreneurs live under the Chinese Communist Party.
Mm-hmm.
But we've had like the miners within China understand the risk of the CCP, and we know big operations that actively look to distribute their risk geographically. So they look to find cheap energy sources in other countries, or work with other mining companies in other countries to co-locate their miners and do a revenue share with that, so they don't have all their capital risk in one country and under the CCP.
So it would seem, if you look at China, what's going on there, I know they've talked about issuing their own cryptocurrency. I don't know where they're at in that process. You could probably make it speak to that. But if you look at what's going on, we'll put the pause button on what's going on with Taiwan and Hong Kong today, because I don't want to spend a whole lot of time in going down that trail. But I would say, if you look at least pre-COVID China, end of last year China, the cracks of the foundation of the Communist Party of China were there, and I believe personally probably more prominently there to the leadership than most world geopolitical experts would like to admit. And so somewhere like China, it would make sense, if you look at how hard it is to get your money out of Chinese banks and move countries, as I was talking about earlier. That would make sense, because if you could figure out ways to circumvent the internet, which is well beyond I use Google Chrome. I don't use Tor, so but I know it's possible. If you could use, if you figure out ways to circumvent the Chinese monetary system, Bitcoin would be very valuable to you there, because not only could you make money potentially, but you could also flee the country if you were tired of the regime or you want to move somewhere else, and you've got your Bitcoin wallet in the cloud, wherever, and you just hop on the plane and you go to your new country, and you're set up, and you've got money, travel, simplifying the process of travel documents and visas and stuff like that. But you're not tied to the Chinese monetary system, it makes sense that if you're in China and you're concerned about the leadership, that would actually spark on a revolution of Bitcoin, because one of the things that Bitcoin does is it gives power back to people.
Yeah, one of my favorite ways of describing Bitcoin is as free speech money. And yeah, so you highlighted China as an example. There's many examples throughout history. Nazi Germany seized everybody's gold.
Mm-hmm.
Here in America, Executive Act 6102 in 1933 or 31, I believe, It was an act that got passed, and American Citizens Gold
Yeah.
was
Yeah. Yeah.
seized,
Yeah.
and
Yeah.
they were
Yeah.
forced
Yeah.
to
Yeah.
turn it
Yeah.
in.
Mhm.
And so Bitcoin makes that really hard to do. So again, going back to how Bitcoin works, it's a private public key pair, and that private key is the most important part. It allows you to move your Bitcoin in the ledger, and that private key can be represented in 12 to 24 words, plain English words that can be memorized. So
Mhm.
hypothetically, and this actually happened to me before, you can walk around the world with money in your mind. If you remember those 12 words and you're able to get out of, say you're in China, they're cracking down, you want to get out, you put your money in Bitcoin. Instead of walking with a physical hardware wallet, you can remember these 12 words,
Mhm.
hop on a flight to wherever you are, download some software, put those 12 words in that software, and poof, you get access to your Bitcoin. There's no physical risk. They can't physically take it from you in this instance. So it is possible to walk around the world naked with millions of dollars in your mind.
Yep. So let me ask you. I want to come back to that, but I'll ask you a quick point of clarification. You said the 12 words. I have a buddy who's pretty big into Bitcoin, and he talks about having half his codes here and half his codes there. Can you kind of, because you're talking about the 12 words, which is kind of a new, maybe it's the same thing he's saying, maybe he's saying 6 words here, 6 words there, but he's always talking about his codes are kind of in 2 spots, so he doesn't ever have them in one spot in case they get stolen.
Yeah, so there's
And maybe it's a different system of storing the wallet. I don't know. I'm just,
no, so that's one way. That's one way of doing it, and that's risky because if you lose half of that, you lose.
lose it all.
You need all 12
Hmm.
to get. But that can be done safely. Like hypothetically, you could hold 6 words in a vault in Texas and 6 words in a vault in Pennsylvania, and if you're able to get them both, you want to move your Bitcoin,
Hmm.
you physically go get those words, you put them together.
Hmm.
Yes, that's possible. But another thing that Bitcoin enables is something called a multi-signature transaction, where you need 2 private keys, 2 or more. So n of m. So most popular is probably 2 of 3 keys. So you can set up a Bitcoin wallet in a way where to move the Bitcoin, you need 2 private keys, 2 of 3 private keys to actually move it. So you can hold a hardware wallet in Texas, a hardware wallet in Pennsylvania, and then you can even back those up with seeds as well. And you can hold those seeds in different places as well to help distribute risk more. And as long as you have the 2 hardware wallets to sign the transaction, those Bitcoin will move. So there's ways to distribute that risk geographically, so you don't get $5 wrench attacked if somebody
Right.
comes up to you and is like, hey, give me your Bitcoin. You're like, hey buddy, I actually can't move it right now unless we fly to Texas.
Right.
We get that other half.
Right. So it could be but a good thing and a bad thing. So if the 12 words are in your head and you get concussed or whatever, you might not be able to get them back because you can't remember. Or if they're split apart, you might not be able to access them. But if they're split apart, you kind of prevent the something happening in traumatic brain injury, which is obviously a low risk, but something like that, or being captured and someone knows you got a lot of Bitcoin and holding you hostage. Now you keep talking about the wallet. I don't want to get too much into the weeds on the wallet, but just for folks who are listening, I have $162.19. I don't know what it was at the beginning of the podcast. I'm rich on Bitcoin. I bought mine through Robinhood because I'm not going into the wallets and stuff like that. So I know that what I have, again, as I said, this is more just to kind of keep me tracking with what's going on because I got a lot of stuff to track, and if I don't have any kind of tie to it, I almost forget it. But what you're talking about is not being done through Robinhood or probably TD Ameritrade, which I have an account with as well. Probably done through something else. So let's just kind of maybe separate, and we'll link to these maybe resources below. But you're not talking about opening your Robinhood account or your TD Ameritrade account and buying Bitcoin there, right?
No, and I would actually note that on Robinhood, you're just buying exposure to Bitcoin price movement. So if you ever wanted to take your Bitcoin off of Robinhood, you wouldn't be able to. So if you have
Right. No, I understand that. Just to be clear, that's why I wanted you to kind of walk through this.
Yeah, but
Yep.
on apps like Cash App, Kraken,
Mm-hmm.
Gemini, you can take, if you buy Bitcoin on there, the exchange will custody it for you for as long as you want. If you're not comfortable downloading your own wallet software, buying a hardware wallet, the exchange will custody it for you, and you can always send those Bitcoin off exchange to your personal custody whenever you want. Robinhood, that is not the case.
Right.
Just to be clear.
Yes.
So what I'm talking about with wallet software, so it's basically software that allows you to create this private public key pair. And so you create a private key that gives you control of the wallet. And then the public key is actually, it's millions of addresses that you can send your Bitcoin to. So you have the private key. This private key gives you access to move Bitcoin within these millions of addresses that are produced via the public key. And yeah, so it's basically a string of letters and numbers, it's a long string that is produced via, there's been software products created that allow you to easily spin up and create new addresses that you can send your Bitcoin to. So something like electrum.org, electrum.org is an open source wallet software that you can easily download for free on the internet, and you can create a private public key pair and start sending Bitcoin to personal custody. There's other products like hardware wallets, which are physical devices that hold the private key on the device and make it sort of easier. It's a somewhat better UX for people who like tangible things. You can buy something like a cold card, a Trezor, a Ledger, and that'll create a private public key pair for you, and you can send your Bitcoin to that physical wallet as well.
Yeah, and we'll try to link to obviously your show and newsletter, so folks could find a lot more information about stuff like that. But I just want everybody to be clear: if you go on your some of your trading platforms like Robinhood or TD Ameritrade or whatever, you're just not. It's not what you're talking about. And so someone might leave and go, God, that Marty guy is the smartest guy I've ever heard of. I'm going all in on Bitcoin, and then they realize some of the things that you're talking about doing is just not functional the way they bought it. So I just want to make sure everyone understood that.
Well, it is for most apps. It is. I don't think TD Ameritrade and Robinhood. No.
Yeah.
If you're using Cash App,
right.
You can do it. If you're using Kraken, Coinbase, Gemini, you can do that. Do what I'm speaking of. But
I think there's one. Is it BI Finance? Is that right?
Binance.
Binance. That's right. Binance. I've someone sent me this a while back. Like, hey, if you ever get into crypto, you should look at Binance. I don't know. Is Binance a good site?
I don't recommend it. Okay, so I am what many would consider a monetary maximalist, I think. So Binance has thousands of coins outside of Bitcoin that you can trade, and I consider Binance a casino because there's been a lot of scam coins, altcoins that have been created in Bitcoin's wake that sort of point at Bitcoin and say, hey, Bitcoin's inefficient here, here and here. Hey, we're going to produce this coin that's going to sort of perfect where Bitcoin has failed. There's a huge meme out there that Bitcoin is the MySpace of cryptocurrencies, but that couldn't be further from the truth. What a lot of these people pushing altcoins really don't understand is the power of network effects, and Bitcoin has a network effect that I don't think will be overcome by any of its competitors in the digital currency space specifically.
Okay, yeah, let's touch on that briefly. So Binance, you are now off my list. As what's it, O'Leary? You're dead to me. I will not. I will ridicule the person who sent it to me and say the expert laughed at him. So there we go. I'll say stupid stuff because I'm ignorant, but you know, I have to make fun of my buddies who are making this stuff. Go ahead.
No, I mean, I fell prey to sites like Binance when I first got into the space. It's really easy to look at Bitcoin and think, hey, why does it take 10 minutes for a block to confirm? Why do I have to wait 6 confirmations to be sure that my Bitcoin's not going to, the transaction's not going to be overwritten? Why does it come with a fee to send the Bitcoin transaction? And if you're used to Venmo, PayPal, debit, credit cards, and the way they work, Bitcoin is sort of unnatural. It doesn't make sense. But when you dig further, you realize that Bitcoin makes certain trade-offs to enable its distributed nature, to basically ensure that it will be decentralized and cannot be corrupted by a central authority. It makes trade-offs in the form of a 10-minute block time. It cost, there's a fee associated with Bitcoin transactions, and sometimes they go up. This is one of the costs of making sure that miners get paid. Block space is scarce. The block space where transactions are included is scarce, and so fee markets develop when there's a lot of activity on the network, and this sort of confuses people, like, why why is sending this money like becoming more expensive, and it's important to sort of view Bitcoin at the protocol level as a very big base to a potential stack that can be built in the future, a monetary stack. And so at the protocol level, it's very slow, it's very dumb, it only does a few functions, but it does them very well, and it ensures that the network is distributed so it can't be corrupted. And then on top of that, you can build layers where you get better functionality, Venmo and PayPal like functionality, where you can send instant transactions. But at the protocol level is a settlement layer. You have to think about it as the central banking layer of this monetary system, where you just have individuals and entities settling at the protocol level, and that's expensive.
Yeah, and just real quick on that, just so if the listeners aren't aware, I wasn't aware the first time I looked at Bitcoin. There is no one hub that a terrorist could get into and blow up, and all the Bitcoin computers go away. Correct?
No, like the computer I'm talking to you on right now, I have the Bitcoin software downloaded on,
Right.
And there's tens of thousands, potentially millions of people in the future that'll be doing the same thing. And to destroy the Bitcoin network, you'd have to go to each individual's house.
It's, for lack of a better term, it's in the cloud. It's not centralized. And so, real quick, we will link to this as well, coinmarketcap.com. As you mentioned, there's a bunch of coins on here. Some that people might have heard of, obviously Bitcoin, Litecoin, Ethereum. I don't understand the Bitcoin Cash, Bitcoin fist fights that happen, but those are hilarious. So as an outsider, when the guy gets mad for calling it Bcash and all that, I have no idea what the background is there, but just look up Bcash fight or whatever on YouTube. There's a brother out there and he gets mad and call it Bcash. So I don't know what's going on with that. I've just seen those. It's been a while. Those are hilarious. I'm trying to think of any of these other coins I've heard of, but so essentially what your argument is here, and we'll link to this so people can kind of see. There's a list that there's. I'm scrolling down here. I'm 100 coins. It looks like, at least there's 100 coins on this page. You look at the market cap. Bitcoin is obviously substantially ahead of Ethereum, and that's probably the second most well-known name. I would say Litecoin, at least for me, is probably another name we hear regularly. And Bitcoin Cash you hear, but that's more trying to understand what the difference between Bitcoin and Bitcoin Cash is. And your argument is I'm following it without having to get too much in the weeds, is Bitcoin is not only light years ahead as far as it got an earlier start. It's got a more robust system worldwide built in. It has a lot of things. It's almost like a Coca-Cola, whereas it's got so much moat that it's going to be virtually impossible to overtake it. Is that a kind of a short summary of what you're getting at?
Yeah. I think the way in which Bitcoin was launched and the grassroots nature of the protocol to date really sets it far beyond any of its competitors. Any coin launched after Bitcoin has sort of been bastardized by the sort of attention around the space. Like Bitcoin was able to sort of fly under the radar and develop a natural network effect by itself. And now anytime a new altcoin's launched, everybody knows about it. And it's gotten to the point where venture capitalists are buying up a bunch of the supply before it's launched. And it's been bastardized. You're not going to have a immaculate conception that Bitcoin had moving forward, just for the sheer fact that there's so much attention on the space.
Okay. Now, so folks, that's a kind of I don't say primer. That's a good 40 minutes, 45 minutes of Bitcoin talk. Hopefully it's understanding. Now let's talk a little bit about the Great American Mining Company for our oil and gas folks out there who go, okay, I kind of have a better understanding. Ryan, you're an idiot. This was all baby stuff to me. I don't know, but hopefully this was helpful. So why natural gas? Why the Balkan? And for our oil and gas folks out there, what interest? Why should they be interested in? You're talking to someone like yourself to do the Bitcoin mining. Is it a monetary gain? Do they actually get Bitcoin? They get dollars? Kind of walk me through why would they want to do this?
Yeah. So again, going back to the race that miners are engaged in, they're engaged in a race to find the cheapest energy sources in the world. And at Great American Mining, we've been a part of that race for a few years now, and we've stumbled upon, almost a year ago, we sort of stumbled upon this using waste gas to mine Bitcoin situation that we find ourselves in today. And it just turns out that waste gas on oil fields is very cheap. If it's you, I mean, I am not an expert in the oil and gas industry by any means. You you and your audience definitely knows way more than I will know, but we are finding, specifically in the Bakken, where we are in North Dakota, we find that being in North Dakota is strategically beneficial for us because of the regulations in the state, specifically where O&G producers have to stop production after X amount of emissions have been sort of reached. And so
right, let's just break that down. So the first, maybe just a very practical reason is you get to, if you're making money on your oil well, you can keep making money on your oil well. Aside from everything else you're going to say, you can just keep making money. If you need to produce oil, you can keep making money doing that. And then that's point one. Okay.
Exactly. So we view Bitcoin mining as a flare mitigation service. We show up on site, and that's, again, Bitcoin miners will go to where the cheap energy is. And so these oil fields, they're not really close to the markets that they're serving the oil to, and the oil is easier to transport and is much more profitable to transport. The waste gas that's produced is not the same story. Or you have people creating liquid natural gas on site, and sometimes pipelines are built. Mostly they're not, to serve that gas to market. And so we're able to show up and say, hey, instead of flaring that, instead of turning it into liquid natural gas, why don't we just run a small pipeline that's dozens of feet long to our generators, and on the other side of those generators we have Bitcoin miners plugged in, and so you're able to reduce your flare via Bitcoin mining. And so we basically take that, mine Bitcoin, and then the beauty of Bitcoin is it's digital, so you can mine it in the middle of North Dakota, and then you can send your Bitcoins to an exchange and liquidate them and spend them wherever you want.
Okay, so yeah, a couple quick questions there. You said mitigate the flaring. Is it can you guys actually take all of the excess gas, or only a certain percentage, or does it depend on the well? Or I mean, let's start there with that one.
It's more dependent. The more important variable is the mining hardware in existence. So right now, if we wanted to consume all the gas where we are in the Bakken with the company that we're working with, like, it would quadruple the hash rate on the Bitcoin network. So this is so early on in this game. That's the biggest variable, is we can consume as much gas as the amount of hardware we can get our hands on.
Okay.
So we could scale that right now. Practically over the next 2 years, we think we could get to 100 to 200 megawatts of gas consumption throughout the Bakken, just us personally as a company. And it's going to take time to scale and build the capital base needed to purchase all the equipment that goes into mining and actually set it up. But yeah, over time, as Bitcoin becomes more solidified in the world, and chip manufacturers, start building more ASIC chips dedicated to Bitcoin mining, it'll be possible to consume a ton of this waste gas.
Okay, and that brings me to my second question. You touched on it there slightly. I'm a producer in the Balkan or the Permian or wherever. I'm like, okay, this is interesting. There's equipment involved. So am I paying for the equipment? Am I renting the equipment? What is my cost to go on this venture with you guys?
So it depends. It depends on how you want to engage. So again, we view ourselves as a flare mitigation service. So the oil producer we're working with, we're basically a contractor where they say, hey, you want to reduce your flare, we will come on and do that for you for a very small fee. We've actually been doing it for a minuscule fee. It's not really material at all, just because we want to prove out our use case and prove that this works to a few oil companies first, so they have an aha moment. So we have to date have self-funded all the mining operations, where we can we buy all the stuff, we design and construct the containers and sort of set it up on site. But depending on how much money you're willing to invest, how much time you're willing to invest, how much risk you're willing to take, you could certainly self-fund it. But we could also come in as sort of a contractor and say, hey, if you need to get rid of your flare, we can do this for you. And depends on how much you want to sell the gas for. If you want to sell it at all in the Bakken, they're just giving it to us. Right. And I envision in the future, access to the free gas will just lead to Bitcoin revenue shares with the producers.
Yeah. Okay. That leads to my next question. Producer sitting there going, I don't have a Robinhood, and I don't know, I've seen TD Ameritrade, and I got a wallet, but it's leather. I don't want to get paid in Bitcoin, but if I can make more money doing Bitcoin, I want to do it. So, what are some of the just again, at a high level, the options for if they not all the contractual details, but if they're going to some kind of partnership, is it, hey, we're going to mine the Bitcoin and then we give you guys a percentage, but we'll convert it to cash for you, or I don't even know if that's legal because of tax reasons, but kind of walk me through folks who go, oh, okay, this is kind of there's no coin I can hold in my hand. And as we know in oil and gas, we like to hold stuff. We're very tangible people. And so help me understand the payment process. Again, just at a high level.
Yeah. So again, it's so raw right now. It's the Wild West. It's
Yeah.
all we'd be willing to do it however any particular producer wants to do it. If you guys just want to get paid out in cash, that's certainly possible. We would have to figure out on the treasury side, like the tax implications and the legality of liquidating the Bitcoin and then handing it over in cash. But that's a problem that I'm confident will be pretty easy to solve. If you want to do a combination of holding some of the Bitcoin that's mined and cash, that's certainly possible as well. But yeah, it's all up to, again, the amount of risk you're willing to take and how you want to get paid out. Again, the fact that you can mine Bitcoin, once you mine it, you can send it to an exchange and liquidate it immediately or within a very short amount of time. So the possibility to get paid out in cash quickly exists if that's what you want to do. Yeah, it's pretty easy.
So it can be flexible. Let's see here. I think those are some of the main things. What are some of the maybe questions that producers have asked you guys that you want to maybe point out here, or concerns that you've heard?
It's not really concerns. It's just really our biggest hurdle is just educating people about Bitcoin and how it even makes sense. People just see our boxes on their oil fields, like, what the hell does that thing do? They just know that it consumes
making money. I don't understand.
Yeah,
it's not money. It's Bitcoin. Like just
so most,
making money, right?
yeah. So most of the questions we face are Bitcoin related.
Yeah.
They can, I mean, it's tangible. You can see the flare stacks visibly reduced when we show up on site.
Right.
And we have the data, and then we have the data to back it up. We've consumed X MCF of gas for you over X amount of time, and it's material. It's you can track the data. It's there, and it works. And we're finding that if you did want to get some skin in the Bitcoin game and actually invest in mining as a producer yourself, like, it is much more profitable than building a pipeline or doing liquid natural gas. Like, especially at times when the Bitcoin price is skyrocketing, and like we back tested the data going back to that run to 19,000, and it's hard for some people to believe, but like, you could sell that gas at one point during that run for something like $100 per MCF.
Wow. That's crazy. That's crazy. Okay. Let me ask you this, a general Bitcoin question here. We'll wrap up these last two. What is the biggest obstacle or concern? You said it could go to zero. Give me, what is that? How does it go to zero, or why would it go to zero, or why would you say such a thing? How dare you? No, but why would you even throw that as a possibility?
You just have to be upfront with people. To me, honestly, I think the only thing that could kill the Bitcoin network at this point is a solar flare, and that would destroy the grids around the world. Like that, you'd have to bring down all the grids around the world. You can't kill an idea, and the idea of Bitcoin has been out running in the wild for 11 years, and it's one of the strongest ideas I've ever come across. And once you truly understand the nature of the protocol, how its stakeholders operate between each other, and the freedom that it enables in the digital age, there's no turning back. It is here to stay, I think, outside of some crazy natural disaster. Some things that could slow up the network moving forward, I think, are the centralization of the chip fabrication producers. So the foundries, right now, the chips that make Bitcoin mining go around are produced in three spots predominantly, and these are in Taiwan, in South Korea. But so seeing President Trump a couple of weeks ago come out and announce that he's going to be building a foundry in Arizona was extremely encouraging to see. So I think that risk is being reduced over time and will continue to be reduced. But yeah, I mean, the idea of Bitcoin is crazy. It's almost hard to believe how revolutionary it could be, because again, it brings sound money to the digital age, which gets people out of the rat race of chasing yield just to save their purchasing power over time. Compare that to the central banking world, which is completely, sorry, it's noon here. It's the central banks that are constantly debasing your money and sort of pushing the Cantillon effect on markets. Bitcoin is a fair monetary system. And then when you think about second order and third order effects it has on the world, I think of the energy sector as one of the sectors that'll benefit most from Bitcoin. Like, it's going to create efficiencies across energy production, whether it be renewable or fossil fuel production. And so for oil and gas, for your audience specifically, I think Bitcoin, we've seen it the last 3 months specifically, like the profitability of the oil sort of drives the industry. And so you're poking as many holes in the ground to get as much oil out. And it's becoming maybe apparent that there's been a misallocation of capital in this sector, specifically just in the drive for oil. And to think that you could actually get more profit and more revenue from sort of the waste that comes with the oil production, it would lead to less of a misallocation of capital. And actually, many people think that Bitcoin mining specifically will help sort of level out energy prices and reduce risk overall for the sector, because you always have Bitcoin mining there to be the consumer of last resort. You're always going to have demand from Bitcoin mining to consume your energy if you're willing to sell it at a price that's cheaper than what is needed to be profitable to mine.
Okay, I said 2 questions. This is the last one. Yes or no? Are you Satoshi?
No. We are all Satoshi. We are all Satoshi.
I read the book Life After Google, I believe is what it's called. And there's just hearing all the stuff about the kind of the myth about I say myth, just the stories and stuff around Satoshi was quite entertaining. I have no idea much more beyond what that book said, but I'll link that book for folks who are interested. But it was interesting.
There's a crazed Australian man running around claiming to be Satoshi. He is not.
He's not. Okay. How do you know? See, yeah. Have you ever seen?
I can tell you how we know. So last week, this guy, Craig Wright is his name. He's been on a year. He's part of like the Bitcoin Cash split, and so he's been trying to convince the markets that he is Satoshi Nakamoto, or at least part of the group that is Satoshi Nakamoto. Then he got taken to court in Florida and was forced to produce documents with addresses that hold coins that he claims he owns as Satoshi. So he actually released those or he gave those documents to the court, and those documents became public, and people looked at those Bitcoin addresses, and the guy that actually held the Bitcoin in those addresses noticed that, hey, those are my Bitcoin addresses. And it's another beauty of Bitcoin. You can verify with messaging using your private key. He signed a message with his private key saying, hey, that guy doesn't own these Bitcoin. I own them. And here's proof.
Wow. That's crazy.
I just signed a message. Yeah.
Okay. Well, I may or may not be Satoshi. I will not answer that this podcast. Thank you for your time. There are some, we're going to link to your website, your newsletter, podcast. That'll all be in the description below. I think you said you might have some resources or books or whatever, websites, whatever that you can send over that if you do that we can put down there for folks to check out as well. Obviously don't listen to me on Bitcoin. I am not the Bitcoin expert by any stretch of the imagination. So we will send folks your way so they can learn more about Bitcoin and 21 million, right?
21 million, a little bit less, but it's a whole nother conversation. But I hang out on Twitter a lot too. So if your audience wants to find me on Twitter, I'm at Marty Bent.
Okay, yeah, we'll link that as well. Marty, thank you for your time. It was interesting. I still don't think I fully understand the Bitcoin thing. It's about the 16th time it's been explained to me. But one day, I will realize it, and that day I will go, gosh, I should have bought a lot more, probably.
Takes a lot of time. It takes a
Not
lot
in
of
my
time.
Robinhood
I
account.
completely understand.
So, all right. Thank you, Marty. It was wonderful.
Thank you, Ryan.
And I'm sure in the future we may have some more questions as things go along and get you back on.
No, I'm sure there will be a lot more questions. I'm happy to answer them.